Welcome back to another episode. Today we are going to take a quick look at the gaming market and a company that just reported earnings. Today, Corsair Gaming reported their earnings before the market opened. It kind of opened up pretty high, but from there is down about 6.5% from its daily high. So today's episode, I'm going to do a very quick overview on their earnings, and I'm going to share this awesome presentation. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have 10 free stock ideas for you right now, and also a link to my free newsletter where I share these presentations and all the other companies I'm covering right now. So Corsair currently traded under the ticker CRSR. Earnings date were November 2nd before the market opened, so today, and this is a company that focuses in the hardware and peripherals of the gaming streaming market and computers. And let's just take a quick overview. So Q3 revenues were $391 million. That's actually down 14% year over year and down 17% quarter over quarter. To be honest, I thought this was actually going to see a stronger decline in my opinion, in stock price. But they do mention a little reason why that revenue is down. We'll see that in a bit. But at that 391 million, 252 million came from their gaming computer and systems. That was unfortunately down about 15% year over year and about 21% year over year. The main reason the gaming computer and systems segment was down is right now there is such a low supply of graphics cards. There's also a huge increase in cost for graphics cards that they believe it's preventing people from buying components for high power systems, right? So that's causing a huge kind of slowdown there. Another thing I want to mention is they have $139 million in gamer and creator peripherals. That was down about 14% year over year and is down about 10% quarter over quarter. For the full year of 2021, they did give a guidance of about 7 to 13% growth, right? There's one more quarter remaining and it's going to be the holiday season. So like I mentioned, one of the biggest reasons revenue is down right now is due to high cost and low supply of graphics cards, which is preventing people from building high power PCs and spending money on components. The other reason is obviously higher logistics costs. Shipping things has kind of slowed down. Still shortage in certain ICs or integrated circuits that are used to create, for example, some of these creator peripherals. So that's kind of caused a little bit of slowdown there. So it's affected both revenue down and gross margin down. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. At the same time, they did announce some new products. If we take a quick look at the presentation that they gave us, one of the new categories that they're hitting is the streaming cameras. This is going in the streaming market. Another one is they kind of entered into the gaming monitors as well. A new technology in the DDR5 memory. This is kind of as right now DDR4 is the main component. DDR5 is kind of coming into the market now. And as people continue to evolve and kind of increase this market or kind of improve their computers, I do believe DDR5 will eventually be super strong in 2022, maybe even in 2023. So they do mention some highlights. Now, kind of less back talk. I mean, we're talking about Corsair, but at the same time, we should kind of look at the inside of the market as a whole. First thing I'm seeing, right, is Corsair is telling us that, hey, right now, gaming computer graphics cards are not really going to gamers still. It seems like they're still going elsewhere. People are still not really focusing on making gaming computers. So I do think this is great for a lot of graphics market that, hey, even if crypto mining slows down, the gaming market is still strong and is awaiting prices to go down. That's the first thing I'm seeing. The second thing I'm seeing is I recently did an episode on Google and Alphabet, and one thing I saw during their earnings is that they're still seeing strong demand in new content creators. Content creators are going all around the platforms in forms of e-commerce, social platforms, and trying to develop a video platform, a voice platform So for me, the content creator peripherals can still see strong growth. So now let me just share some more overall thoughts on the company. Let's take a quick look at the presentation. So some things to note, like I said, upcoming holiday seasons can be impacted by supply chain issues, by those graphics cards, but they do mention that they believe as GPUs become more available over the next few quarters, there is a pent-up demand for building high-performance gaming PCs. So there is some growth potential in Corsair. For me, Corsair is more of a company that I just like to take a look at to see how the market is doing. I'm not too interested in the peripheral market or in the hardware market. If I was, I would say Corsair would probably be one of my favorite contenders since they hit different markets. If this was to enter my portfolio, I do not own it at the moment, and I don't have any intentions of buying right now, but if I did, it would probably be a low tier 3 company. Another thing I wanted to mention is this company's stock price. I want to say a good portion of risk has been eliminated. So if I was bullish, this would be a company, or if I wanted to buy, this would be a company where I wouldn't mind dollar cost averaging a nice mid to high position at once, right? But remember, in form of position sizing, this would be a tier 3 at most for me. I believe there's probably better players to hit in the gaming market. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.